Hi guys, we're gonna wait just a few more moments here, let a few more people join in, and we'll get started here shortly. Okay, perfect. Let's go ahead and get started. Welcome to Discover. I'm Brianna with Deliver, and we're really excited about this session and so excited to have y'all join us today. Today, we're going to be discussing the latest e-commerce marketplace trends. Have some really great guys joining us today to discuss this. So we have David from ChannelAdvisor, Joe from Marketplace Pulse, and Adam from Helium. So we have a lot to cover today. I don't want to keep any of y'all waiting. So I'm going to let David get started and jump right into ChannelAdvisor.
Great, Brianna. Thanks for having us today. I have to admit, after 18 months of virtual events, I kind of miss seeing the audience, but maybe one day soon we'll be back into that mode. So today I'm here just to share a little bit of information as we see it, along with my fellow panelists. So go ahead and get going here. I think I can advance the slides. Great. So for the last 5 years or so, I've tracked quarterly GMV disclosures from some of the major e-commerce platforms that publish them. And it's always kind of fun to look at these. I don't have Q2 yet. Obviously, most of the companies here, or excuse me, Q3, most of the companies haven't reported yet. But it's kind of, it's always fun to look at this and see what's going on. And you can see that there was obviously a pretty big COVID bump last year, started in Q2 of last year. And not surprisingly, after 4 quarters of just, huge e-commerce growth, the rates have come down now that we're lapping COVID. But what's kind of interesting is you're starting to see a little bit of a bifurcation with, I think, at least early indications. You see Amazon, who made huge investments in logistics last year, and Shopify, I would say, emerging as what looked to be kind of secular winners at this point, and lower growth rates or even contractions in the case of Walmart and eBay. And what's interesting overall is that pretty much everyone, though, is still pretty markedly above the 2019 levels. And it's our view that e-commerce has continued to grow overall, even as we lap COVID, and that a lot of the habits that consumers have developed over the last 18 months, for the most part, we think are likely to stick. Now, some folks have said that we've pulled e-commerce forward by 10 years is kind of what I saw earlier in the pandemic. And I think that was probably a little bit of wishful thinking. I don't think it's been that dramatic, but I think it's fair to say that we've probably pulled forward maybe 2 or 3 years in terms of e-commerce penetration, and it's not 10 years, but 2 to 3 years is actually pretty significant. So a couple of other things. If we look at, this is a Harvard Business Review study, and it probably confirms what we already know, that about 3/4 of consumers use multiple channels during their online shopping journeys. And fundamentally, what that means is to be successful online, you really can't just wing it or sell in one particular channel. You've got to have a strategy that ties these things together and helps you measure your results a little bit more holistically. And just to give you like a little bit of sort of concreteness behind that, I know as an industry we always talk about Amazon, we talk about Walmart, we talk about eBay, but if that's all you're focused on, you're probably missing some opportunities to connect with consumers. So we support probably at this point a little bit over 200 marketplaces around the world. In an aggregate, when we talk about Amazon, eBay, and Walmart, our largest trading partners, and the rest we kind of group into what we call the long tail. And you've probably heard of some of these, but maybe not all of them. Sites like Zalando, Auto, House, and many others. And what's interesting, at least in our data, is that long tail is growing at about triple the rate as the big 3 on our platform. And if you take them all together, that long tail is actually also bigger than Walmart and eBay for us. In fact, Zalando has grown so rapidly that on its own, it might actually exceed Walmart on our platform in the next few quarters. So there's this really huge and vibrant, kind of fast-growing array of channels out there, ways to reach new consumers. Sometimes they're region-specific, sometimes they're category-specific. But if you're not, looking at these and taking advantage of them, there's a good chance that you're probably missing out on some share. So let's look at some categories over the last 18 months and see how things have evolved over that time period. So what I'm going to do is just go through a few different categories and highlight kind of the trends and some of the faster growing channels that you may not have heard of before. And again, I'll emphasize that this is on our platform, so it may not be exactly the same as what the actual channel sees. This is just a reflection of our customer base. So last year, apparel was really interesting. You can see the 2020 growth in blue. And not surprisingly, at the start of the pandemic, people, weren't shopping for a lot of clothing. And when they did start shopping for clothing, it wasn't like business attire, or for the office. We saw a spike in what I call comfort clothing, things like sweatpants, slippers, and stuff like that. And in orange, that reflects 2021. You can see a combination of stimulus dollars and also the easier year-on-year comparison to the decline last year. You can see we had a pretty big rebound in apparel sales. But if you look at the dashed gray line, and the color coding will be consistent in all the categories that I show you, you can see that there's been pretty solid growth compared to 2019. So a lot of companies now are doing this 2-year stack, this comparison of 2019 to try to eliminate some of the noise from last year. And you can see it's been pretty healthy overall growth in online e-commerce. And as far as marketplaces, obviously the larger ones are kind of obvious, but again, we look at sites like Otto and Zalando and Shop Premium Outlets and Target Plus being really strong growth drivers for this particular category. So again, if you're in this category and you're not taking advantage of some of those other sites, you may be losing out. So if we look at home and garden, that's another interesting one. Again, last year is in blue. And not surprisingly, when everyone is stuck at home, they turn their attention to what? To their home and to their garden. And so we saw huge growth in this category last year. And not surprisingly, this year, that's been kind of hard to match. So it's a little bit more subdued this year. But again, if you look at that 2-year stack in gray, you can see there has been a pretty significant step function increase in e-commerce volume in this particular category. Again, we see Target Plus being an interesting channel that's driving some good growth there. And of course, Wayfair. Kogan is one out of Australia that's been growing really nicely. And Otto, which I believe is out of Germany, has also been a really good growth driver. Business and industrial is kind of an interesting one, partly because this includes office furniture. And as you can see, it was fairly stable last year, although we did see a spike in home office equipment last year. It took a month or two from the start of the pandemic, but you could sort of see this pattern where people were realizing like, wow, I'm going to be working from home now for probably a little bit longer than I thought. I'm going to have to stop working on this cardboard box. I have to go buy a desk or get a comfortable chair. So we saw a pretty good spike there. And this has been a really healthy category overall through, if we look at the 2-year stack. And interestingly, despite its size, Amazon is also one of the fastest growing channels in this category for our customers. And as you would also expect, House, Home Depot on the dropship side, and in the UK, there's a site called OnBuy, which has been really successful in this category. Health and beauty, I'll move a little faster here. Health and beauty, which includes hand sanitizer, not surprisingly, a category that just skyrocketed during the pandemic and is still grown this year. So obviously people still have concerns about, staying safe and during COVID. And in this case, we saw Catch out of Australia being a really, really strong channel for this growth. Of course, every country's had different experiences with COVID. And I think in Australia, where the vaccinations were a little bit slower to roll out, you really saw, consumers focusing on how they could get these products. Sporting goods is a fun one. Again, when people are stuck at home, what do? Well, they buy stuff for that they and their kids can play with. I remember last April, one of the real head scratchers was for like a 2-week period. We saw this huge spike in bouncy castles, those inflatable things you put in your yard at a birthday party. And so I was really trying to figure out like what was going on here. And it suddenly dawned on me, you got all these work from home parents with like young kids, and the parents are trying to do like Zoom calls, and they needed a place to stick their kids that was like padded and safe and could lock them in there and maybe burn off a little bit of energy. So that's remains my operating hypothesis, is that bouncy houses were a big driver of this. And we've seen it drop off this year, right? And I guess it makes a little bit of sense. This is a category where when you buy a product, like you don't have to go buy a bouncy castle every year, right? There's a little bit more durability to these products. So a little bit more subdued this year compared to last year. But again, that 2-year stack looks pretty good. So sites here would be like Zalando, Best Buy Canada, Kogan again in Australia. Auto parts, one of my favorite categories. It's kind of funny if you look at the initial part of COVID, it really kind of fell off because, well, nobody was driving anywhere, right? And so the spending, kind of took a good dip initially, but then we saw the stimulus program start to come in, and all those car enthusiasts, they're sitting at home, they got their stimulus checks, and they're like, I guess I'll go buy like a new exhaust system or whatever for their car. And we saw channels like Web Shop Manager, which specializes in the auto industry, really do pretty well. I shouldn't go much further on the marketplace side without just mentioning this big trend of retail media. Retail media is a pretty fancy term that the industry uses for basically just how to advertise on these channels. So everybody knows Amazon advertising, but there's Walmart Connect, eBay sponsored listings, and basically every channel is adding advertising. And in our experience, that real estate is taking over more and more of the screen real estate. And so if you're not leveraging it, you're probably falling behind. And really, that's one of the benefits of using ChannelAdvisor. We tie all this together in one platform to help you do everything from marketplace integrations, drop shipping, digital marketing, shoppable media, fulfillment, analytics, so you can stop worrying about the details and start focusing on your growth. So that's the business we're in, and I'm happy to have had a chance here to share some of the interesting data that we've seen. We have a ton of this. I could go on for hours, but I know we have limited time. So Brianna, I think I'll punt it back to you if I'm correct about that.
Awesome. Thanks so much, David. That was great. I definitely might be buying a bounce house here in the near future, contributing to that. Well, awesome. So then I will hand it over now to Marketplace Pulse. Joe.
Hey, hey, this is Joe from Marketplace Pulse. Usually I write data-driven articles about e-commerce and marketplaces, and everything I'm going to talk about today is covered in much more detail in a bunch of articles we have published in the past, or we will publish in months to come. So if you take anything out of this talk, you should probably check out our website. But in the short time I have, I'll try to share six trends which I think are the most interesting in marketplaces and how to think about them. So the first one, which I think has captured all the headlines around e-commerce, around Amazon, is all the Amazon aggregators. These companies have either launched last year or a couple years before that. Obviously, we all know Thrasio, which is the fastest, the biggest aggregator of all of them. But beyond that, we are tracking over 70 companies, most of them based in the US, but we are also seeing companies in Europe, in India, in Singapore, in Mexico, pretty much worldwide. And what these companies do is that they acquire Amazon sellers as well as Shopify stores, and are starting to expand into other marketplaces, as well as expand the sellers that they have acquired into other channels, even retail stores. And I think to me, this trend is probably the most interesting because it's bringing liquidity to businesses which previously had very unclear possibilities to have an exit. So previously, as an Amazon seller, as an eBay seller, you could be profitable and have a great business, but it was hard to see the end to it. Now with Amazon aggregators, there's an easy way to sell, and thus you can take the cash out of the business and build another business tomorrow. So I think that's just bringing a lot of excitement and speed into the market, but it's also going to influence advertising prices as well as other factors in the market. And the most important aspect of this market is the amount of capital these aggregators have attracted. So in roughly 16 months since April 2020, they have raised almost $10 billion in capital. Most of that is obviously through debt, which they use to fund the acquisitions. But fundamentally, this industry is flush with cash. Most of that cash is going to acquisitions. And that basically means two things. First, if you're thinking about selling, you can do it very easily, but also those aggregators are going to be around for years to come because they have enough capital to sustain themselves for a longer time. So I think we're still all waiting to see what's going to come out of them. Are we going to see consolidation? Are we going to see some of them going public? Are we going to see them competing with smaller sellers, et cetera, et cetera? I think which is a very interesting aspect of the marketplaces. Second, fulfillment is obviously fundamentally broken. If you're selling anything online, if you're having to deal with imports or you're having to deal with finding fulfillment and warehousing space in the US or beyond, you definitely have noticed that it's very hard to do any of these things. Why is it so hard? imports out of China have become very, very expensive, 4 times, 5 times, 6 times more expensive as they were before the pandemic. A whole host of reasons causing the price increase, but all we can do is just basically wait and see what's going to happen in the future. I think most people would agree that this is not going to get better at least until the summer next year, might be even longer than that. So depending on the product you're selling, if it's a small item, probably not a big impact, but if you're selling larger items, this is a major issue and it's not going to go away quickly, unfortunately. At the same time, Amazon's fulfillment warehousing is completely out of space. And I feel like most of the sellers who are planning for Q4 are now under planning their sales they're going to have because they will be out of stock of most of items because Amazon is not letting them to have, it's not letting them to send in all the quantity they want to be sending in. And the reason for that is that Amazon itself has admitted that e-commerce use has grown so fast, and thus Amazon use has grown so fast by shoppers that they just weren't able to keep up with that growth and build enough fulfillment capacities to support that. So as an industry, we're all waiting for Amazon to add more capacity, but again, that's not going to happen quickly. It's not going to happen by Q4 this year. It's not going to happen by the end of this year. So you have to plan around that differently. Look for 3PLs. Look at kind of spreading your fulfillment across many different warehouses because that's the only way to do it. But marketplaces continue to get more internationally, and I think this is for most domestic sellers as well as European sellers. This is probably both a concerning factor, but also something to keep in mind is that most marketplaces now are trying to, as quickly as they can, trying to add international sellers. Even marketplaces like Walmart, which used to be 100% US-based sellers, have recently, over the last couple of months, expanded to include international sellers. And every time we talk about international sellers, that always means sellers from China. So Walmart, 10% of the sellers on Walmart since March came from China. Probably more of them are going to come in the future. So as more and more international sellers flock onto these marketplaces, they're likely selling the same big goods as you were selling, and they're also just fundamentally increasing the number of competitors you have. So there's always something to keep in mind. But even Amazon, which previously had over 100 countries allowed to sell on Amazon, have now since allowed pretty much every country on the planet Earth to sell on Amazon. So every dark blue country in this map has been recently added as an allowed country to sell on Amazon. Previously, only the light blue countries were added. That basically means as a seller, you're still competing with businesses from anywhere on Earth. And as David mentioned, advertising is becoming a huge factor on marketplaces. On Amazon, that basically results in ever increasing advertising costs. And while we're still talking about $1 or less, or $1.20 per click, that's still a small amount compared to the sort of the average product price. Those ad prices are slowly increasing, and they will continue to increase as more and more brands and more sellers come to marketplaces, as well as well-funded companies like aggregators come to Amazon to sell. And Amazon can only increase advertising space so much, and because they can't replace all of Amazon with advertising as much as they might wish to, because the advertising space is physically constrained, advertising prices will continue to increase. And Amazon, again, as David mentioned, is not alone. If you look at eBay, if you look at Walmart, if you look at Etsy, all marketplaces are introducing advertising. All marketplaces are increasing the number of ads on the page, and advertising is continuously playing a more important role for sellers and brands. How you manage advertising and how you manage profitability with increasing advertising, I think is key. But despite all these things, I think marketplaces are still wide open. We always talk about saturation. Is that a thing? Do marketplaces have enough sellers already? Is it going to be impossible for new sellers to start on marketplaces? And we never find evidence of that. So one of the metrics we look at is every year, how many of the selling sellers are actually sellers who joined recently. And this chart basically shows that as we move through the years, there's every year an additional layer added, which are sellers who joined this year. So if we look at this chart for if we look at this chart for 2021, 10% or so of sales are from sellers from 2021. If you look at this chart for 2019, 10% of the sales were for sellers who joined in 2019. So every year, new sellers replace some of the old sellers, and overall the marketplace continues to grow. So I don't believe there's any saturation. At the same time, we're seeing massive churn amongst brands. So as sellers are introducing private label brands, a lot of them kind of fail to grow their roots, and then they die off pretty quickly. So the wild west of the marketplaces still exists. This final piece, I think I'm going to disagree with David a little bit, if I'm allowed to. I think for most of the sellers, I think we are moving past the goal of just focusing on marketplaces and just trying to be Amazon sellers or just trying to be marketplace sellers. We have to think bigger. And the way I try to think about it is that we, as sellers, need to be building brands. Even if they're not brands today, they should think about themselves as brand builders. And I think the best way for me to think about it is this. Amazon and Shopify ecosystems used to be very distinct, and there was very little overlap. But if you pay attention to this, you start to notice that every year, this overlap is increasing every time. And more Shopify sellers are successful on Amazon, and more Amazon sellers are successful on Shopify or other direct-to-consumer brands, direct-to-consumer platforms. So that's kind of my finishing thought, is that it's no longer about being a marketplace seller. It's no longer about being an Amazon seller. It's just being about e-commerce seller and thinking about all of e-commerce as one single platform. Thanks.
Perfect. Thanks so much, Joe. Lots of helpful information there to take into consideration as we plan ahead. And perfect. So now we'll transition to Adam with Helium 10.
Whoa, what happened there? Hey, guys.
Go back. Yeah. Sorry about that.
I'm not touching it.
Go.
All right. How's it going, everybody? Thanks so much, Joe and David and Brianna. And thanks to the Deliver team for having us. I'm Adam Shabazz. I'm VP of Strategy with Helium 10. I'm also a new father, as you can probably tell from the diapers in my background. So I'm just keeping it real with work from home. I was on David's recommendation. But anyway, I'm super happy to be here, and a very fortunate segue from Joe. I'm here to talk about how brands are actually a thing of the future. So first, a note on Helium 10. I'm actually just going to skip this one. I thought I'd have this removed, guys. So here we go. So just a quick note on Helium 10. So Helium 10, if you haven't heard of us, we make insanely powerful tools to help serious Amazon sellers grow every aspect of their business. I promise I'm not going to read all of these slides, but I think that's a really key point. We're really focused on going super deep on Amazon. We basically collect a ton of data to help our Amazon sellers get unique insights that were sort of previously only available to super advanced enterprise type businesses. And we're making that available to Amazon sellers to help them compete. We agree it's not a saturated marketplace, but you do need to find your niche. You need to do product research, keyword research, understand the ins and outs of selling on the marketplace. And so we provide the tools to help you do that. We also provide educational content and resources for people to get started. And we have a really great podcast I recommend everybody check out. It's called Serious Sellers Podcast. I'm going to go a little bit into some tips for how to build a brand in this presentation. But we only have about 10 minutes here. So if you want to go deep, I definitely recommend you check that out. Just to give you a sense of the scale, we have over 1 million users globally. We process 2 billion data points daily, which is, again, that's pulling in sort of keyword tools. We're making revenue estimates on a per product and per keyword market level. So it helps you sort of understand where you sit compared to your competitors. We have a free Chrome extension that has over 500,000 downloads. And we process $4 billion of GMV on a monthly basis. So pretty scaled up tool set that we use to basically just empower SMB sellers. And ultimately, we're here to help you crush it. In fact, we actually have that written on the back of our shirts here. I don't know if you can see that. So if you see crushing it out in the wild, you know you're with Helium 10, you know you're in good hands. All right, so I don't have a ton of time here, so I wanted to try to bring a trend to, again, we generally speak to sort of our Amazon and marketplace seller constituency. So I wanted to try to find some really interesting data for you guys that you could take away to actually go back and crush it. And found some really cool insights from our friends at Global Wired Advisors to help you start thinking about the value of your business. So if you're an Amazon-centric brand today, you're probably thinking about FBA aggregators. You're probably thinking about, how much are you doing in sales? How much are you doing in earnings? And what could you potentially sell this business for? That's definitely something you want to be thinking about. But one thing that we noticed when we worked with Global Wired Advisors is that at a certain point in earnings here, if you are a multi-channel brand, you actually get a premium valuation over being an Amazon-centric brand. It starts happening at about $2.5 million of earnings. And as you can see in the graph, there's sort of a step function increase in exit multiple if you are a multi-channel brand. Meaning, in other words, for the same amount of earnings, you could basically double the amount of money that you're going to make upon exit. And it's really not just about creating an exit, but it's about creating resilience and value for yourself, right? For your business. So if you want to run your business for the rest of your life and hand it off to your kids, it's going to be more resilient and more valuable if you start thinking about creating a multi-channel brand as opposed to being only an Amazon brand. Now, why does this happen? From an exit standpoint, it's happening actually because you're inviting more buyers in. So that's sort of the mechanic, right? You're getting more corporate sponsors, you're getting strategic sponsors, you're getting traditional private equity. But what's really happening is that all of these buyers who are very, very smart people are willing to bid more for more valuable businesses that are de-risked from a platform standpoint. Meaning, if you're a multi-channel brand, you can get into Target or you can get into Walmart, or you're selling direct to consumer. You're less subject to, Amazon's whims or a change in an algorithm or any individual changes happening on a marketplace, right? So that's actually creating more value for your business, and that's what is actually going to bid up the price. So this looks good, right? I want to do this. Okay. Well, what is a multi-channel brand, right? So a multi-channel brand is a business that sells consistently themed product set that works across channels. Okay. So it's not, I sell sporting goods on Amazon. I sell home goods on Walmart. They're not connected. It's about creating sort of a consistent theme that works across channels. So that's actually what I mean by de-risking, right? Your product set works here, it works there, it goes direct to consumer. So if it gets taken down on Amazon or something bad happens or whatever, your business isn't sort of, going south, right? You can continue to grow. Okay. So if you want to go multi-channel, the key to this, again, is building brand. So what is branding? Branding is super academic. I really like this book called How Brands Grow by Byron Sharp. You should totally check it out. But he sort of makes the point that branding is the process of creating mental and physical availability. Physical availability, Amazon does this great, right? Your products are in FBA warehouses. They get to the customer in 2 days. Everybody knows if they have a need, they're going to express that need through a keyword search. And if your product comes up to the top, it gets right to the user. Boom, you make some money. But what about mental availability? Right? So mental availability is customers saying, oh, I recognize this. Oh, I saw it on Walmart, or I saw it in an ad somewhere, or I heard my friend talk about it. Right? So starting to create that mental availability in the customer's mind helps them not just make a purchase decision based on reviews alone, but they can also recognize that they see that brand somewhere, they have some innate trust in it perhaps, and they might go ahead and make that purchase wherever they find it. Right? Now, channels like Walmart today, just to get approved to sell on Walmart, which is somewhere we just expanded to, they require some sort of business history, and they want to see that you're actually growing on Amazon and potentially elsewhere. And if you even want to go sort of upstream to places like Target, they're even going to start evaluating your social media and looking at, really how much of a brand is there, because they're sort of betting on you. If they're going to let you into their environment, they want to make sure that if customers see your products while they're shopping, that they're likely to buy, and that's going to increase sort of sales and GMV for the marketplace or retailer, which is obviously going to create the flywheel that everybody's looking for. So it's really important, we think, going into the future. Now, obviously, there's probably been a lot of discussion outside of Joe's presentation just now, but inclusive of Joe's presentation about logistics challenges. So that's obviously a big concern. But we really think that going into the future, logistics challenges will get solved, and it's going to be really important that if you want to grow your business, you start finding ways to build brand. And so you might be thinking, Shabazz, like, I'm an Amazon seller. I did my keyword research. I did my product research. I kind of have a little niche here, but I have no idea how to build brand. Okay. So I have good news for you. Where's that next button? Here we go. You can actually start brand building on Amazon. So Amazon is actually a great place to fast forward your growth and incubate your brand. In fact, Amazon is probably the place, counter to perhaps popular perception, Amazon's probably the place where brands are getting incubated today, right? If you're starting Shopify, for example, a great place to grow a brand as well. You have to learn, customer acquisition, and there's sort of muscles that you're going to have to train that you may not necessarily know how to do right out of the gate. Maybe you just have a great product and you want to get it in the market. Well, Amazon's a great place for that because you can, you basically have customers coming to you, you do the keyword search correctly, and you can start making money. And then you can start expanding on what your brand looks like from there. Right. And also the good news is that Amazon is becoming more brand friendly. So you may have, this is actually, I don't think it's because they're necessarily, I'm sure they're very nice, but I think what Amazon's trying to do is they're trying to create a better customer experience in their marketplace. And they also have competitive pressure from places like Shopify. You may have also seen that they eliminated thousands of Chinese brands that were sort of black hat brands from their marketplace recently. These are all efforts to sort of up-level the customer experience on the Amazon marketplace. And part of that is getting more customers in and supporting sort of more well-known brands. And so we actually ran some experiments. And again, go to Serious Sellers Podcast for more tips on this. But we ran some experiments where we were driving traffic from social media into Amazon, from Google into Amazon, sort of off-platform traffic. Amazon loves that. And we were rewarded with improved rank for our listings on Amazon. So if you want to go deeper into that, again, check out the podcast. Bradley Sutton's our chief evangelist, really fantastic guy. And so a great place to start brand building, but you should set yourself up to expand beyond Amazon. Alrighty. So a couple of tips for ways that you can start doing that. One, extend your customer experience. The customer experience does not end when the customer receives the item. In fact, from their perspective, that's when the customer experience begins. So there's a lot of effort, obviously, spent in listing optimization and keyword research and doing all the things that you need to do to stand out on Amazon. But take the opportunity to extend the customer experience and surprise and delight them. So we have a tool that allows you to create product inserts and do QR codes and collect customer data and basically extend that interaction period, right? So once they open the item, if they are, Dollar Shave Club obviously does an amazing example, does an amazing job at this. You open the box and it's like, wow, look at all this cool stuff. It's really cute. It's really fun. It gives you a positive feeling as a customer, which again, speaks to that mental availability. It makes you sort of remember that, and you have a sort of an immediate positive emotional reaction to that unboxing experience. You can do this with Amazon, right? So you can add cute inserts. You can be really clever. Think about how you could take your product and you could invest in extending that customer experience, and don't miss an opportunity to connect, right? So if you can get them to follow you on social media, if you can get some email data, there's a lot of value in that, and that will set you up potentially either to go set up Shopify and you'll have a list that you can promote to, or you basically have optionality in what you can do with that data. And people, thanks to COVID, QR codes finally took off in America. They've been a thing elsewhere for a long time, but they do work. And we definitely recommend that as sort of a tactic. And then just last little bit here, what we've also found is that if you want to build credibility as an Amazon brand, you can start small. This is actually, I use an example from this is Katie Joe. She's actually I'm a rock climber. She's a rock climber in the Southern California rock climbing community. And she's sort of an influencer. And here she is with an axe. Like, I'm sure Survive Outdoors Longer as a brand is great. I don't know, but like, this is not, there's nothing unique about this product that you couldn't go and try to source from China. Like, this could be you, right? And when I messaged her, I hadn't talked to her in, really, really long time. And I just, hey, Katie, can I use this? And she was super friendly. Oh, of course. Now, if I try to send Alex Honnold a message, who is, if you may have seen Free Solo, he's uber famous rock climber now, like, he's not going to respond to me. Right. So now, if you are in that community and you are investing in your authenticity as a brand, and you're sort of, actually, like, if you're me and you're rock climbing, you're trying to sell rock climbing gear, I can get in front of Katie and I can get her to work with me. So that's like a really great way to start building a relationship, work with those smaller influencers. They actually have more credibility in what they're doing because they want to be authentic, right? Like it's really important for them that they're not just sort of like hucking the latest thing. They want to show things that they're actually interested in using. So it's really perfect for niche and growing brands. And again, don't be afraid to use this as an opportunity to drive traffic into your Amazon experience. So you don't have to like learn all of Shopify and everything else right out of the gate. You can start here, drive it into Amazon. You're going to get some organic rank juice from that. And there's really positive things that can happen there. So I think there's some really great ways to start as an Amazon seller and extend your brand. And then that'll set you up for potentially going multi-channel. So again, just a quick recap. These brands are generally more valuable. You can build value for yourself or for a potential exit if you start setting yourself up to become a multi-channel brand. Brand building is about physical and mental availability. You can definitely get started on Amazon. You don't have to, throw the baby out with the bathwater on this. You can sort of take incremental steps, and creating authentic, memorable experiences is definitely the way to go to get started. So thank you so much, everybody.
Awesome. Thanks so much, Adam. That was super insightful. Well, great. We are actually at time, and I know that y'all had some great questions that were coming in, so we will be sure to address those at our follow-up, or in our follow-up. I apologize. Just wanted to remind y'all that we do have about $100,000 worth of prizes going on. So the more sessions that y'all attend, the more likelihood you are going to win one of those prizes. So after this, we are going to be talking about the current state of freight forwarding. So please be sure to stay on. But just wanted to take this time one more time to thank David, Adam, and Joe again for joining us today. And thank you guys as well. So the next session should be starting here shortly. Thanks, guys.
All right.